Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 9th of March. Starting off with Ascent Resources, where it looks as though speculation regarding the company actually pumping some oil and gas, I suppose. Here we've got a situation where on a technical basis, yesterday was a gap close reversal, so exhaustion gap there last month, and the shares closed above the top of the gap yesterday at 3.25 above that. We're hopefully looking towards the 200-day moving average at 4.25 initially, and then best case scenario target up to as high as 8 pence at the top of the broadening triangle from April last year. Obviously, that's the best case scenario. Ideally, there's no price action or no fresh lows for the shares. The turnaround backed by a bullish divergence line, so as the share price fell post-December, the RSI got stronger and stronger, so hopefully that will bode well for the shares. Moving along to another obvious winner with oil through 130. Here we've got Borders and Southern, and situation here is that we're looking at the shares having already hit one of our targets there, up to 3 pence, and now it's really a matter of trying to work out where we'll go next. The old high there was 2.9 pence back in January last year, so it would be surprising if we didn't beat that by at least a decent amount. As far as what the target might be, I think we're looking at something along the lines of the line I'm drawing at the moment, up to 5 pence, which is a line of resistance from August 2020. So above around the 2.93 pence area, looking for as high as 5 pence, maybe by the end of next month. And the way things are going, that could even be by the end of this month. Europa also in the same sort of theme with the oil and gas situation. Here we've had a gap close, a sort of double gap close actually. So yesterday the shares closed above the top of that gap at 2.6 pence. That gave us a buy signal, at least for a retest of the best levels that we've had at the beginning of the month at 3.6 pence. And while we're above the top of that gap at 2.6, we're looking for the best case scenario target here up to about 4.75, maybe by the end of next month. So looking quite chirpy there for EOG. A particular favourite of mine is iGas, and the reason for that is that it's hit that resistance line projection. I think I was calling the shares up from the low 20s area, something like that, at least the break of that 19 level. And that resistance line there from September set the shares up for a move up towards 32 pence, which has been done. The view now is that we can actually get a fresh move to the upside, upper parallel there, up as high as 42 pence by the end of next month. And that's valid while we hold above the floor of the overnight gap at 27 pence, above 27, looking for 42 over the near term. Again, we've got an uptrend line in the RSI window, so that is backing or has backed the rally that we've seen over the recent past. So very helpful technicals there. On to a slightly different type of chart, different type of company, McBride. Here we've got the first signs that the shares are ready to turn. We've got an uptrend line in the RSI window, bullish divergence line there. Third bounce, normally the good one, and that's been the case in the last this week basically. Above, an end of day close above 47 pence, recent neckline resistance, and the last gap there, which should be enough to get us up towards the 60 pence area, at least getting the turnaround going after a rather brutal period since the summer for the shares. A bit of a falling knife situation with the Russian-focused stocks. You never quite know whether they're going to be there or not, but at the moment we see POGS, Petromovlovsk, bounce off the falling RSI support line in place since September. Bit of a bear trap there from below yesterday's low, which was around the 2.67 pence level. Above that, looking for perhaps the 5.75 area, which was the resistance on the way down, but obviously that's not for widows and orphans. Another situation which is looking good at the moment is Premier African Minerals. So had a good run obviously during February, gapped up here now, and above the gap floor there at 0.31. We're looking for at least a retest of the best levels towards 0.5 and maybe up to 0.6 on a 1 to 2 month time frame, only back below the 50-day line, currently around 0.26, really delaying the upside scenario, but ideally we don't go back below 0.31. Another stock which sort of fits the bill in terms of being fundamentally backed at the moment is Rearbold, uptrend line in the RSI window, heading rapidly towards the target here around up towards 0.45, 0.5 pence, and not too soon perhaps even to upgrade the target there towards the 0.6 pence area, which sort of fits that peak there from September. And as this looks like a mid-move consolidation above the 200-day moving average and a V-shaped bull flag, 0.6 could be on the way over the next couple of months or so for Rearbold, so quite encouraging there. Gold stocks, obviously back in vogue with gold through the $2,000 level. It should be much higher really, but one of the mysteries of life. Here we're trying to break with Shanta, the resistance line there from July. If we can do that, then it should be back up towards 12 to 13 pence, which was resistance for the shares on the way down. Inverted head and shoulders type pattern, a rising 50-day moving average near the lows, which is normally a good sign, and looks like it'll deliver the goods here for Shanta. If you're cautious, maybe wait for an end of day close through 10 pence, and that would at least solidify the bull argument. Stop loss back below 8.6 and that rising 50-day line. Good to see Tullow on the front foot at the moment. Here we've got break of that falling wedge, bullish divergence as well. So that is the reason for inclusion today. Should hit the 200-day moving average at 2.6 pence over the next few weeks, possibly by the end of the month. But the big win there is it looks like we've got a proper lasting turnaround. Stock which managed to stay at the same share price, even though, well, it was the same share price at 2.2 pence when oil was $40 a barrel. And finally getting off the ground there for UOG, rising 50-day line near the lows and very extended bullish divergence line there from back in September. So hopefully that'll kick in for another move towards 3.5 pence at least, and hopefully this time whoever's selling the shares above 3 pence will go away or get blown out by the market. Let's see what happens there. Upside very much in place while we hold above the 50-day line at 2.5 pence, and so hopefully that is the end of the bear run there for UOG. Finishing off with Alien Metals, and here rising 50-day line, we gapped up, had a bear trap gap reversal at the end of last month, and we've had support totally above that level, the top of that gap there at 0.65, above that we're looking for the shares to retest October resistance of 1.2 pence plus. Best case scenario target over the next couple of months up to the top of that broadening triangle from this time last year, as high as 1.5 pence, perhaps by the end of April. That's it from me today. More updates tomorrow.